What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock, what you should be looking after for the future, and why today was a very crazy day. I'm going to break down why for the short term Tesla could see a bit of a bounce approaching Investor Day, and why for the medium term I do believe there's going to be a lot more downside for the market and Tesla to come based off the data that we got and what many analysts are saying about the Fed and their future policies. Now, before I break anything down about this though, before I get into any more details about the charts, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 4 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. Looking at Tesla, as of right now, we can see that this is resembling a bull flag pennant formation where Tesla was on a very nice uptrend and this thing has been now slowly getting tighter as it downtrends, and we could see a breakout to the upside as we approach Investor Day. Now, I believe that's very possible, and I did mention to everyone that yes, we had a bullish divergence developing on SPY and QQQ. It still is developing, suggesting that the market could get a small bounce, but I'm not counting on the overall market bouncing too much. And the reason for that is because PCE came out and it was not good whatsoever. Once again, the Fed has to come out and be even more hawkish because inflation is getting out of control. To start us off, Tesla was down about 2.57% for the day. That is not a big deal in my opinion because the overall market was down almost 1%, right? And that's important because Tesla tends to have a beta above 2.0, meaning that when the market's down 1%, Tesla should be down around 2% or so. When it's up 1%, Tesla should be up about 2% or more than that, right? So that's completely normal. This wasn't necessarily surprising to see Tesla close around here. This was just an average close. But like I said before, there is some potential for Tesla to try to bounce and fill the gap, taking it all the way back to 200. And going into Investor Day, yes, that's going to be awesome. There's going to be lots of hype, but the odds are favoring that the upside would be temporary. And for the medium term, there is going to be more downside. I'm going to explain exactly why. To start us off, some news came out for Tesla. Right now, we can see that Tesla moved their headquarters, the engineering headquarters, to California. That I actually talked about that yesterday, and there was a crash that happened in Scottsdale. I think a Tesla crashed into a building and it caught on fire. Once again, things like that happen, but we're still waiting on more details to come out to understand what actually went down. Now, I don't want to go into any more details about that. I do want to note that right now there wasn't really too much coming out affecting Tesla, and there's a lot of hype right now associated with Investor Day. And I do believe that the game plan that Tesla comes out with will be very spectacular. I do believe it's going to lead to lots of hype, maybe some bullish momentum for maybe a day or so. But like I said before, I don't expect Tesla to just explode and continue to push up forever. I do believe there's going to be some major downside for Tesla and the overall market going into like March and April. And that's because of what we're seeing from the Fed, the monetary policy, and the data that's coming out right now. So the Dow dropped more than 300 points as we saw a very hot inflation report again. The Fed's favorite inflationary measure is PCE, and the measure rose 0.6% in January, more than expected. That was insane. That's a crazy amount that it rose by, and that is not what the Fed wants us to see. Core Personal Consumption Expenditure Price Index. It rose 0.6% for the month. That was up 4.7% from a year ago. The headline inflation increased 0.6% and 5.4% respectively. That is also very hot. As a result of this, looking at the charts, I did mention to you guys yesterday that there was a possibility of it being a little bit hot. I did mention to you guys that we could see a bounce in the markets if this thing came as expected, but I also told you to be prepared for anything if this did end up being like very hot. It's also sometimes a little hard to predict exactly what's going to happen because this data is manipulated. I know that, and I'm sure everyone or the majority of investors should be aware of this because, once again, this data is just used for the excuses that the market makers are making. They're using this data as an excuse to short even harder, to start covering positions, to start reallocating funds, to reposition, and all these different things. And right now, right, they want there to be some catalyst to cause more pain for the markets. And on top of that, it's not just about what they're trying to do, but also the reality of the situation, and that is inflation is way, way, way too hot. It's still too hot, and we have to keep our heads up despite that. So looking at the data, we have core PCE right over here. Over the last couple of months, we saw this thing declining. Inflation was declining over and over again, and at least that's what reports were telling us, and we're finally seeing a bit of an uptick. That's what tends to happen because we have cyclical inflation. There are going to be many periods where it increases and other periods where it decreases. Starting a new year, we tend to see it actually tick up. And as we approach like the summertime, we also tend to see it tick up a bit as well. That's what the trend is showing us. And I do believe it's very important that everyone's prepared for this. Now, going into like previous years, like 2019, we would typically get upticks around like January time. This happened many, many times, January, February, and even parts of March. That is what's happening right now. And this could even continue as we approach like the summertime. So please be very, very cautious. I also want to note that right now, we're actually seeing the 2-year yields once again reaching their highest levels since 2007 as a result of the high inflation. This is once again the bonds market pricing in the Fed being a lot more hawkish, and they've been doing this while the market continued to rally. This is telling me that the market was not necessarily in real life. The market was not in reality. The market was in a fantasy world where it just kept, pumping and pumping and pumping, not backed by any fundamentals. Next to no fundamentals really backs that. I know Tesla's one exception because they had a relatively strong report, but I'm talking about the broader markets. And the yields are telling us that we are likely going to be entering a recessionary phase very, very soon. On top of that, we did see more data coming out involving core PCE. Once again, very, very overheated. I also want to mention that the expectation, I forgot to mention that, the expectation, the forecast was 4.3%. Once again, it came out at 4.7%. So way higher, more than 10% higher than what we wanted it to be, or almost 10% higher. 1 month, it's up 7.1% month over month. 3 months, it's up 4.7%. 6 months, 5.1%. And for 12 months, it's 4.7% up. It's crazy, crazy high. It's way too high. And like this man said, Jason Furman said, we have made little, if any, progress on inflation. Once again, I don't think that the Fed has made a very significant amount of progress, and I think there's a lot more work that has to be done. As a result, JP Morgan's Dimon is saying that the US interest rates can reach 6%. Crazy high numbers like that. And this, in my opinion, is telling us that, once again, the Fed has to be even more hawkish, the Fed has to remain more restrictive, and they did not expect that they would have to raise rates this high or like to high numbers like this. But this is becoming closer to reality. This is becoming more realistic. And now it's telling me two different things. We're seeing very high spending growth and faster price increases for both core goods and super core services. What this tells me is Jerome Powell is not trustworthy. Okay? I'm going to be blunt. I don't trust him at all. He told us, firstly, that high inflation was transitory. Remember when he was saying that last year? It's going to be transitory, nothing to worry about. Guys, it's going to be fine. Then he started saying that there could be some pain. That's what's happening. Now, or like very recently, the guy said, we're seeing signs of disinflation. There's disinflation right now. Inflation is clearly cooling off. The Fed is making lots of progress. That's completely the opposite of what the data is telling us. The data is telling us that we have another round of inflation. Americans are not saving money to the rates at which they should be. And we're actually seeing millions and millions of Americans continuing to use credit cards to get into more debt. More and more credit card debt keeps on appearing. People keep on using their credit cards. Why? Because they don't have enough money to buy the same amount of things as they did before. We're at the highest levels of credit card debt we've seen in history. We're also seeing Americans that especially retail becoming very bullish in the stock market, buying in like crazy at the top. Once again, not the best of times to do so. So the bottom line is, if the Fed wants to bring down inflation, they have to slow down the spending that Americans have. They have to actually cut government spending to some degree. And I know that's very difficult for them to do that, but it is true the government has to do that eventually. And the government has to be very careful with how much money they're printing on a day to day basis because it's not helping with the situation whatsoever. I also want to note that for everyday Americans, my heart goes out to you because this is a very, very tough situation and it's going to get worse. Jerome Powell was telling us there's going to be a soft landing. The landing will be soft, or he said we'll most likely get a soft landing. The odds keep going up. Don't worry. I don't believe him. I don't trust him. I believe there's going to be a lot of pain to come. That's my honest opinion. I believe the stock market has more downside. It's going to get dragged down. It's going to drag down Tesla as well. I believe that Americans are going to have to start being very cautious with their spending. They're going to start saving more money. They're going to have to start depending less on credit because credit, it has its limits. They can't depend too much on credit forever. They have to pay back that money eventually. On top of that, inflation or high inflation is not transitory. These high prices are not going to just disappear out of nowhere. The Fed is not going to be our knight in shining armor and just make it all disappear. They're going to remain high for a while, for many, many years, and we're barely seeing wages starting to try to keep up. Wages have not increased to the same degree as inflation right now. So very concerning stuff. And that's why I'm telling everyone, I have empathy for the people out there, the American people that are struggling right now. They're in a very tough place. We also saw millions of Americans leave the labor force participation rate. We also saw a lot of Americans, struggling. I mean, it's just very hard. And the bottom line is, if we remain optimistic, if we never give up, we will get through this, but there will be pain on the way. There's going to be a big increase in unemployment. We're going to see lots of jobs get lost. We're going to see lots of Americans start losing their jobs soon. We're going to see a lot of pain from that end. Inflation is going to remain high for a while. Americans will struggle, but we will survive. I believe we will. I believe we have to remain optimistic and we have to keep our heads up and we cannot give up amidst all the problems that are going on right now. So honestly, I don't have much trust in Jerome Powell. I do believe there's going to be pain and this will have a negative effect on the whole market, the stock market, and Tesla. Real estate is also going to start to see a big, big, big disruption. I do believe we're going to see real estate continue to go down. The rates, once again, are going to continue to go up. As the rates go up, we're going to see demand continue to slow down in the real estate sector. And I do believe we're going to see a big, big, big correction in real estate as well. The stock market is typically the one that falls first, and we are going to see, in my opinion, more downside. We had many, many people from JP Morgan Chase saying, many analysts saying they could see another 20% drop in the stock market. That is very possible. All right? Please be ready. As of right now, Tesla has a relatively high price pairs ratio. It's holding up pretty well so far. And I do believe it's going to continue to hold up. I do believe Tesla's going to get a nice push up approaching Investor Day. But after Investor Day, things become a lot more serious. We have to be very careful because the Fed is coming out and they're going to have to be a lot more hawkish, like Bullard was saying. Bullard is one of the Fed members. A lot of people laugh at him for reiterating the same things, but he was right about the Fed having to start raising rates in March. That's what happened. He was right when he said the Fed had to become a lot more aggressive, and he's been saying the Fed needs to give us a 50 basis point rate hike. He was saying it for so long. People thought he was crazy in the beginning during this whole non-fundamental backed rally, but I believe he might end up being right. And the odds of that happening keep going up with these high inflationary reports. So yes, Tesla's holding up for the short term. For the medium term, there will likely be pain in my opinion. Right now, we're actually seeing Tesla outperform. Tesla's doing pretty well for today. We have good ratings from many analysts. We do have a tendency of being green on Monday, so I do believe Tesla could try to bounce very soon. Also notice that the overall short interest is continuing to decline. Shorts have been covering quite a bit, and that's part of why Tesla was outperforming the market on many, many occasions. And I believe that many shorts are just going to patiently wait. They're not actually piling in as of right now. They might even wait for Investor Day to do so. That's also another possibility, so I'm going to watch this very carefully. I also want to note that Tesla had relatively low volume today, completely normal for a Friday. and the average volume is usually like a 208 million. Today we only got 141 million. So what am I seeing for Tesla? Honestly, guys, it's very simple. Tesla has a very nice demand zone. It tends to actually get these nice bounces between 189 and 187. We could actually approach that level, but before we approach it, we might try to see this thing break out before that ends up even happening, because Tesla actually went lower yesterday than how low it went today. Not yesterday, I mean the day before. So that was on Wednesday. We saw Tesla drop even more, hitting 191. Today our bottom was around 192. So it is technically getting tighter and tighter and tighter. I do think Tesla's getting tighter, and we're going to try to fill this gap very, very soon. I also believe that there's going to be a lot of hype approaching Investor Day. Now, always remember the saying, buy the rumor, sell the news, because these big pumps approaching a big event are not always guaranteed to see big continuations. We could actually see the opposite happen after the event. Is this a giant bull flag? It's very possible this is, and Tesla will try to get a breakout soon. Very, very possible. But once again, I'm not saying it's going to be sustainable. I'm just saying it is still likely to happen. I think the whole market could get a bounce, as we do have a bullish divergence on SPY and the QQQ. I'm not going to show you guys the charts right now because I'm in a situation where there's a storm near me and my Wi-Fi is just not acting right today. So I can't really switch my charts, or else my whole screen is just going to lag. I don't really want to do that. Just remember, we do have some bullish divergences on SPY and QQQ. They are likely going to play out maybe a little later. I think the market could get a small bounce. I'm not counting on it to be too big. And if anything, what Wall Street is going to do is they're going to wait for the bounce and then start shorting at the top. They're getting ready to reposition and get ready to start shorting, because I do believe the market has more downside to come. I think everyone needs to be very, very cautious. The big thing in the markets is sentiment. Sentiment is starting to shift as we're seeing the fear and greed index decrease on the greedy side and become more and more fearful as the days go on. This is likely going to continue as the Fed and their speakers have to be more restrictive, and we have more and more days like that to come. I want to thank all of you for listening. Please have an absolutely incredible rest of the day. Please stay safe out there and be prepared. Be very, very wise with your money. I'm not giving financial advice, by the way. Be very wise during times like these, because unexpected things could happen. Expect the unexpected and do what's best for your own lives. Do what you deem is best and remain conscientious. Thank you all so much for listening. Have an absolutely incredible rest of the day. Uh, please, please, please enjoy the weekend, and I'll see you guys in the next one. Tesla to the moon, because the long-term future is still very, very bright. I'm very bullish long-term on Tesla, despite the pain that's likely going to come in the medium term. And peace out.